Today, Operation Antispruik around Launceston. Hello again, it's Martin North from Digital Finance Analytics. I've noticed posts covering funds and properties with a distinctively Australian flavour. Well, Cookie Boy has been busy again, and this time he's been looking at price reductions on the portals in and around Launceston, in the northern half of Tasmania. And of course, Tasmania has been seen as a significant growth area in recent years, but it looks to me as though things are on the turn. So today we're going to look at some examples of property price reductions and also cross-correlate it with data from our core market model and household surveys. And we're going to start in postcode 7248. And here's an example in that postcode. It's a house, it's on 655 squares, 4 bedrooms, 1 bathroom, 4 cars, listed 75 days ago on the 11th of July 2022. On the 14th of July, it was offers over $349,000. On the 26th of August, now best offers over $299,000. And if we look at this particular postcode, you can see that the story is quite interesting. There's just over 6,800 households in the postcode, 23% own outright, 29% have mortgages, and 47% are renting. And looking at the mortgage stress, and remember we're measuring mortgage stress in cash flow terms, 71% of households are struggling with cash flow in their mortgages, and 68% of renters are in a similar position. Some investors are also struggling. As a result of that, the households in financial stress overall are about 59%. And looking at our scenarios, the best case scenario is over the next 3 years, a rise of about 10%, the base case a fall of 13%, the worst case a fall of 32%. And to remind you, a best case scenario assumes that interest rates don't go up above 3% and then come down later next year. Migration begins to pick up and unemployment stays low. The base case scenario is that interest rates go up well above 3% and stay there through the whole of next year. Migration is weaker, unemployment starts to rise, and we start to get some of the issues with regard to recession in other countries. The worst case scenario is that rates stay high for long, migration is continually curtailed, and we get recessionary forces from the US through Europe, and even China goes off the boil as well. Now, if we look at the property profile in this location, 66% of the properties are houses, that's 1,926, 14.5% are units, and 19.5% are other types of property, which includes agricultural buildings and other industrial contexts as well as shops. The population ratio is 2.35%, and on census night last year, 7.1% or 296 properties were vacant. Looking at the gross investment returns, around 5% on average is what we see, although the net investment returns were a lot lower at 0.9%. And the ATO reported that last year the average taxable income for an individual is around $55,700. For households, it's about $58,200. And looking at the disposable monthly income, just over $4,000 is typically what we see. The average borrower is paying 32.4% of their income after tax, or $1,320 a month for their mortgage. The average rent is 31.8% or $1,296, which goes a long way to explaining why it is that mortgage stress is a big deal in this particular area. And here's another example in the same postcode. This is a house. It was listed just over 47 days ago on the 8th of August. It's got 4 bedrooms, 2 bathrooms, 2 cars on 875 squares. And on the 12th of August, it was on at $699,000. Now on the 23rd of September, it's been reduced to $639,000. Here's another one in the same sort of area, listed 100 days ago on the 16th of June. It's a house, 2 bedrooms, 1 bathroom, 1 car, offers over $449,000 on the 14th of July. Now on the 24th of August, reduced to $415 offers over. Another one in the same postcode, listed 102 days ago on the 14th of June. It's a house, on 868 squares, 3 bedrooms, 1 bathroom, 2 cars. And on the 15th of July, it was on at $475,000. On the 3rd of August, it was reduced to offers over $449,000. And now we're going to look at postcode 7249. This is a house listed 60 days ago on the 26th of July. 4 bedrooms, 3 bathrooms, 4 cars on just over 1,000 squares. And on the 27th of July, it was on at $695,000. On the 23rd of August, it was dropped to $599,000. Now, looking at my data for 7249, we can see that there are just over 6,000 households in this postcode. 26.6% own their properties outright, according to the census. 38.3% are borrowing, more than 2,300, and 35% are renting. And 63.4% are in mortgage stress. That's measured in cash flow terms, of course, and 64% in rental stress. Overall, households in financial stress, just over half. And looking at the trends and scenarios over the next 3 years, the best case scenario for houses is a rise of 12% over the next 3 years, but the base case is a fall of 11%, and the worst case, a fall of 30%. Looking at the property profiles, 66% are houses, 14.5% are units, and 19.5% are other types of accommodation. The population ratio is 2.23%, and 6.9%, or 296 properties, were vacant on census night. The gross investment returns are 4.9% on average, and net investment returns at 1.9%. And the average taxable income is reported at $66,200 per individual by the ATO, or $70,152 a year per household, based on the census. And looking at the monthly disposable income, typical household has $4,854, and the typical borrower is paying 32.1% of their income, or $1,560 on borrowing, their mortgage, and 30.8% for renting at $1,495. Now, if we look at another property in the same area, again, 7249, this was listed 47 days ago on the 8th of August. It's a house with a gross rental yield of 4.04%, 3 bedrooms, 2 bathrooms, 1 car on 177 square meters. And the offer on the 8th of August was high 600s, and now it's the best offer, over $619,000 on the 5th of September. Here's another example. South Launceston again, listed 138 days ago on the 9th of May. It's a house on 778 squares, 4 bedrooms, 2 bathrooms, 3 cars. And on the 9th of May, it was offers over $1.1 million. On the 21st of July, it was now offers over $999,000. Another one in the same area, this time Kings Meadows, listed 79 days ago on the 7th of July. It's a house on 391 squares, 3 bedrooms, 2 bathrooms, 4 cars. On the 18th of July, it was on at best offers over $745,000. Now on the 27th of August, it was reduced to best offers over $699,000. And this one again in the same area, South Launceston, listed 87 days ago on the 29th of June. Just over 1,000 square meters. It's a house, 4 bedrooms, 3 bathrooms, 2 cars. And on the 19th of July, it was on at $1.295 million. Now, on the 26th of August, it was reduced to $1.189 million. Now we'll go to postcode 7250. And this one was listed 46 days ago on 427 square meters. It's a house, 4 bedrooms, 2 bathrooms, 2 cars. On the 9th of August, it was on at $759,000. On the 18th of September, it was listed at $739,000. And if we look at the data for 7250, we find that there's 21,800 households in and around Launceston. And of those, 34% own outright, 36% or 7,800 are borrowing, and 30% are renting. And looking at the mortgage stress, it's sitting at 70.2%, or more than 5,500 households with a mortgage. Renters are at 66.7% at 4,365, and overall households in financial stress are 49.4%. Looking at the scenarios, the best case is a rise of 15.2% over the next 3 years. The base case is a fall of 8.9%. The worst case is a fall of 27.3%. Looking at property profiles, 66% are houses, 14.5% are units, and 19.5% are other types of property. And population ratio was again 2.23, and the vacancy was 7.2%, or 296 properties on census night. Now, looking at the average taxable income, typical household has $74,144 a year. From a taxable income perspective, according to the ATO, households, according to the census, are around $72,800. And looking at the monthly disposable income, typically a household has around $5,500 a month, and those paying a mortgage are paying on average 28.3% of their disposable income, or $1,560, and typical rent 25.8%, or $1,420. Here's another example in the same sort of postcode, 7250, listed 39 days ago on the 16th of August. It's a house on 453 squares, 4 bedrooms, 2 bathrooms, 4 cars. On the 17th of August, it was on at $849,000, and on the 6th of September, it was on at $799,000. Another one in the same area. This is a house on 7,993 squares, 5 bedrooms, 3 bathrooms, 6 car, offers around $1.75 million. And originally, about 260 days ago, it was offers over $2.49 million. Prior to that, price on application, it was reduced to 1.995 127 days ago, and then 1.76 72 days ago, and it was last listed in May at 1.995 million. As I say, now offers around 1.75 million. Here's another example in the same postcode. This is a house, 605 squares. It's got 5 bedrooms, 3 bathrooms, 2 cars, and it is currently on at 1.495 to 1.595 million. If you go back and look, it was listed 84 days ago, and 73 days ago, it was offers over $1.75 million. And then on the 12th of August, it was reduced. Here's another one, again in the same postcode. A house on 723 squares with 5 bedrooms, 2 bathrooms, and 10 car. And it's on at 1.96 million. 168 days ago, it was offers over $2.95 million. 72 days ago, it was on at 1.95 million. And 50 days ago, it was then at 1.96 million. It was last listed on the 14th of July at 1.95 million. Now it's on at 1.96. Now here's another one, listed 75 days ago on the 11th of July. It's a house, 837 squares, 3 bedrooms, 2 bathrooms, 1 car. On the 20th of July, it was on at $525,000, offers over. On the 27th of August, on at $499,000. And here's another one, listed 53 days ago on the 2nd of August. It's a house on 470 squares, 4 bedrooms, 2 bathrooms, 1 car. On the 3rd of August, it was on at $549,000. Now, on the 2nd of September, offers over $525,000. Another one listed 220 days ago on the 16th of February 2022. It's a house, 659 squares, 4 bedrooms, 3 bathrooms, 4 car. On the 20th of February, it was on at $569,000. Now, on the 26th of August, on at $529,000. And another one in the same postcode, listed 47 days ago. It's a house, 748 squares, 3 bedrooms, 1 bathroom, 2 cars. On the 12th of August, it was on at $525,000. On the 14th of September, it was on at $545,000. Another one in the same postcode, 53 days ago, it was listed on the 2nd of August. It's a house, 699 squares, 4 bedrooms, 2 bathrooms, 3 cars. On the 10th of August, offers above $600,000. And 24th of September, it was on offers over 550,000. And another one in the same postcode. This is a house on 584 squares, 5 bedrooms, 1 bathroom, 4 cars, offers over $599,000. Now this was listed 170 days ago, and it was offers over $699,000. It was reduced then to $649,000, and then reduced on the 24th of May 2022. Offers over $649,000, now reduced to $599,000. And one more in the same postcode, 44 days ago on the 11th of August. This was listed. It's a house, 728 squares, 4 bedrooms, 2 bathrooms, 3 cars. On the 11th of August, it was on at $729,000. Now on the 6th of September, it's on at $699,000. And here's one at 59 days ago listed in the same postcode. It's a house, 483 squares, 3 bedrooms, 1 bathroom, 1 car. On the 28th of July, it was at $745,000. On the 8th of August, it was reduced to $695,000. And another one, 54 days ago, listed on the 1st of August. It's a house, 747 squares, 4 bedrooms, 2 bathrooms, 4 cars. On the 3rd of August, $750,000. On the 15th of September, it was reduced to offers over $695,000. And so there you have it, a bit of a summary of the area around Launceston, which, by the way, has one of the highest levels of mortgage stress across the whole of Tasmania. And the reason, of course, is that prices have risen dramatically, whereas wages haven't, and people are having to stretch themselves. And we also have a demographic shift, so people tend to be older, and that also puts some limitation on their earning capacity as well. And it's also worth noting that the unemployment rate is a lot higher in Tasmania than some other places around the country too. So the bottom line is this: Tasmania is definitely coming off the boil. We're seeing it dramatically in the northern half of Tasmania, and in fact in our earlier review we also showed that down south it's also weakening too. Now, I hope you found that useful. If there are other areas you'd like us to look at, do leave a message below. I can't promise we'll get to it, but we will try. And thanks again to Cookie Boy for pulling all the information out. I would highlight the fact that these are not scientifically selected samples. It's merely what we can see from the portals. But nevertheless, it does tell a story, doesn't it? I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.